Blue Label Telecoms' core business is the virtual distribution of secure electronic tokens of value, predominantly prepaid airtime at present, and transactional services across its global footprint of touchpoints. The company was founded in 2001 and today has a market cap of 4.3 billion rand, a price to earnings ratio of 10 and a dividend yield of 3.6%. That's an impressive market cap.
An impressive introduction, I thought. I mean, the way it works is that they buy airtime in bulk from the likes of Vodacom, and they then sell it through a distribution point. You know, like when you go to the convenience store at the petrol station and you buy 100 Rand Vodacom airtime, effectively you're buying that from Blue Label, and Blue Label in turn has bought it, often at a discount from Vodacom. So a very high turnover business with quite modest margins, which has promised all sorts of things, but really it, at its core, has to do with the mobile prepaid airtime business in South Africa.
And a very choppy share price graph. Tell me what's going on here, Jonathan.
Well, I mean, this Blue Label, I mean, I think that's well managed. It's got the Levy brothers. I know some people say they're young cowboys, but I've met with them many times, and I think that they're very astute businessmen. And got 150,000 points of presence in South Africa. Now, that's why I was talking about this moat. How can you replace that? If you wanted to try and recreate their business, it'll take you 7 years, and you'll have to throw a lot of money in it, and you won't make money for 7 years. So, yes, I've heard there's question marks about the telecom companies, so Vodacom and MTN, trying to put pressure on them, but that's not going to happen. Vodacom and MTN need Blue Label more than Blue Label needs any one of them.
Are the Levy brothers cowboys in your book?
No, they seem like solid citizens. I mean, the business got listed with a bit of hoopla and excitement. You know, they had some media coverage about how the name Blue Label relates to all the empty bottles of Johnny Walker Blue Label, which they downed every time they did a creative deal.
I see, that's where the cowboy analogy came from.
Maybe, but the promise, they went global. They talked up a relationship with Microsoft, which they then unwound and bought the shares back. They got in with a bit of fanfare into Nigeria, got out of there with a bit of a bruised face. They're in India, they're in Mexico, which are both sort of startup type businesses. So I think part of the problem is when they sold the business at its listing in 2007, they raised money at like 6 Rand 70 or something like that. And pretty soon after that, they had the global crash. But at the time of the listing, they made it sound as though this was the electronic transaction e-commerce business opportunity of a lifetime. And instead, it's been a little bit of a spotty performer. But to be fair to them, as Jonathan says, they've got a good business going over there.
With a strong moat, does that moat warrant an investment case right now?
Well, I certainly think, I mean, if you've got a business with a strong moat, you must pay a higher multiple for it, because you can see certainty in the earnings. And Paul alluded to it, they're rolling a similar thing out in Mexico. There's 700,000 mom and pop shops in Mexico that sell bread. They've got a partner, Grupo Bimbo, which delivers bread to 700,000 stores. They're rolling out all of these points of presence. They're trying to get to 700,000. They reckon that Mexico will be bigger than South Africa in 4 or 5 years' time.
The share price at current
Grupo
levels.
Bimbo, what a great name for a business partner.
I saw you picking up on that one as soon as Jonathan mentioned it.
People don't talk about Mexico enough, but it's next to the world's biggest economy. It's 115 million people. It's a big economy with a big emerging middle class, slightly crazy politics, lots of domestic and other violence, but you know, who doesn't? So I think that is exciting too. And finally, I mean, at the current level, the earnings...
That's the question I asked you, at current share price
the earnings have kind of grown into, so the valuation multiples look quite reasonable. So it's definitely more attractive than it was. I'm sort of,
I don't know where exactly you go. More attractive than it was. Is it hot or not?
Well, from my side, it is hot. I think they're also going to pay out more in dividends now. So you're going to get about a 4% dividend yield. It's not going to be shooting earnings out through the sky where it'll do 30% earnings growth. It'll do 12 to 15, but I'm happy with a return of 17 to 19%.
So if it's more attractive than it was, is it hot or not?
Look, I'd like to see them deliver on the promises and ratchet up into some of the other areas of virtual sales that they've talked about, like electricity, prepaid, and all of that sort of stuff.
Yes, is it hot or not?
I'm going to give it the not hot for now with speak to me again next year.
You did say hot, Jonathan.
Right. I said say hot.
So one hot, one not hot.